It does not meet the test of a currency. I wouldn't be surprised if it's not around in 10 or 20 years.
I think it's primarily going to be a means of doing illegal transactions.
If you're stupid enough to buy it, you'll pay the price for it one day.
Cryptocurrencies are the first step to a world with a global, programmable money.
There are still so many misconceptions, and none of us knows what the future holds. But one thing is certain, the future is clearly crypto.
Welcome to your look behind the curtain. Each episode, I will do a short segment where I will tackle a certain portion or segment of the existing financial system in an attempt to highlight the inefficiencies, waste, and fraud that exists and show how cryptocurrency and blockchain technology may provide solutions to those problems. If you have any topics you'd like covered in a future episode, please reach out to us with your suggestions at clearlycryptopod@gmail.com or any one of our other Clearly Crypto social media platforms. And now, let's peel back that curtain.
Pay no attention to that man behind the curtain!
Oftentimes, I hear critics of cryptocurrency say that they don't understand how something that is created out of thin air can be worth anything. Their statements usually precede their declaration of faith and preference for good old-fashioned greenbacks. I often wonder if they have any idea how US dollars are actually introduced into the market or how the Federal Reserve operates. Today I want to give you a brief glimpse into how money is actually created and enters the economy. For the sake of brevity and simplicity, I will not go into detail on many of the finer points as they are a fairly complex subject and can take quite a bit of time to fully understand and appreciate. Many people think that money in our economy is created and issued by the Federal Reserve, when in fact they only account for a small portion of the money in circulation. The truth is that most money in our economy is created by private banks through a practice called fractional reserve banking. Simply put, fractional reserve banking means that the Federal Reserve only requires private banks to keep a fraction of the money that is deposited on reserve. In the US, this fraction is right at about 1/10 or 10% of reserves. Let me give you an example. When I deposit $1,000 into my bank account, my bank is only required by law to keep $100 of that money that I deposited on reserve. They are then free to lend out the other $900 out to other public, private, or government entities as loans. So the day after I deposit my $1,000, Cory decides that he needs a new HD TV to watch the Super Bowl. So he goes to his bank, he fills out all the application and necessary paperwork, and the bank cuts him a check for $900. There is now $1,000 on the bank's balance sheets in my account from my initial deposit, as well as $900 in Cory's bank account from the deposit of his loan check. The bank then keeps 10% of that, or $90 of Cory's money on reserve, and in turn, they turn around and lend out the other $810 to someone else. This goes on until the original $1,000 that I deposited is now $10,000 on the bank's balance sheets, effectively creating $9,000 out of nothing or out of thin air. The banks are lending out money that they don't actually have and charging all of the borrowers interest on all of this money that was created simply by typing numbers into their balance sheet. This is counterfeiting by any other name and is only legal if you have enough money and connections to obtain a banking license. When the federal government wishes to introduce new money into the economy, what they are doing is essentially selling government bonds or promises to repay to the Federal Reserve Bank. The Federal Reserve then turns on the printing presses and churns out crisp new $100 bills, or at least they used to. Nowadays, the vast majority of the money is created just by adding digits into the computer. It's not actually backed by any gold or any other commodity for that matter, just on the US government's promise to repay, and it's then created out of thin air and added to the bank's balance sheets. The truth is that if everyone paid all of their debts, there would be virtually no money left in circulation. That's because all dollars, whether paper notes or ones and zeros in the computer, are debt instruments. They're IOUs. In effect, we're renting the money to run our economy from the banks. The introduction of new money into the economy is called inflation and is actually a kind of shadow tax, if you will, on savers. This is one of the main reasons why the cost of living rises every year, why the US dollar has lost 98% of its purchase power over the last century, and why the wealth gap from the richest to the poorest is larger and is increasing faster than any time in our history. This creates a vicious cycle of hyperinflation, or what the Fed prefers to call quantitative easing, which is essentially propping up the economy by artificially suppressing interest rates and introducing more money into the economy. Simply put, we're printing more money to get out of the problems that printing too much money got us into in the first place. That's about the same as using gasoline to extinguish a forest fire. Voltaire was once quoted as saying, "Paper money eventually returns to its intrinsic value, zero." The average lifespan of a fiat currency is only 27 years, and every 30 to 40 years, the reigning monetary system fails and has to be retooled. This is true even within the US. The last time our monetary system underwent any major changes was in 1971, when Nixon took us off the gold standard, whereby making US dollars no longer backed by or redeemable for gold. That was 47 years ago. Now, don't get me wrong, I'm not trying to suggest that Bitcoin or any other cryptocurrency could or even should replace US dollars as a reserve currency. At this point, that would be extremely irresponsible and dangerous. It's nowhere near ready for that, at least for a major world power. But what about other countries where people have seen their entire life savings and wealth completely destroyed several times over just within one generation due to irresponsible spending and government policies when it comes to currency creation? Countries like Argentina, Zimbabwe, Venezuela, Greece, and Cyprus, just to name a few. What would happen if one of these countries adopted crypto? Well, we're about to find out. Just this week, in fact, Venezuela launched its own government crypto called Petro. It's going to be backed by Venezuelan oil, and the coin is set to run on top of the Ethereum smart contract protocol. They have already started a pre-sale on this. They're open exchanges soon, and they're going to be launching this coin and exchanging their current government currency for this new cryptocurrency. I'm not making this up, and I'm sure this crypto will fail just as spectacularly as the other attempts at government-created and controlled currency. I think we'll see this play out several times in other smaller countries before governments and large institutions begin to adopt open, decentralized cryptocurrencies and blockchain technologies. This is when the citizens of those countries will see true innovation in the financial sector. Increase in speed, efficiency, and security, all while reducing costs, corruption, and disintermediating established financial institutions in favor of more open, transparent, and democratic systems. This is the promise of cryptocurrency. This is the future, and it is coming.
And welcome to episode 3 of Clearly Crypto. I'm your host, Cory, and sitting right to my left is...
co-host Aaron. Glad to be here again for another exciting episode.
Hope you guys enjoy this one. We got some good stuff in store for you. It is February 10th about now, so we're looking at Bitcoin sitting around...
Yeah, it's made a little bit of a resurgence since it's low. It's I think, $8,800, give or take, at the current time. It kind of bounced back from a low of, I think, touched on 57 or 5,800 just less than a week ago. So
I know, that was nuts.
We'll see if it holds. Yeah, I think the market is currently testing the 8,000 support level, and we'll see if it holds.
Yeah, I wish we would have been recording then, because holy crap, that was insane. It's like, oh man, I want to go buy some right now.
Yeah,
because I know it's going back up.
Yeah, well, don't worry. That's the one of the great things about crypto and how early it is. You'll have this opportunity several more times. I'm sure of it. So.
Well, I hope everybody survived the ride and didn't just buy out and go, I can't do it anymore. I mean, look what's going on right now with the stock market.
Yeah, and it's interesting. I don't think there's any necessarily correlation or causation behind that, although you can find any number of different theories that may support or deny that. But yeah, just looking at the stock market lost another $1 trillion, I think, yesterday, down another 1,000 points or something to that effect. So. Although the stock market's continuing to go down, crypto has seemed to have made a little bit of a comeback.
Yeah, but from a layman's perspective, it looked like at least there for a little bit. Once the stock market dropped a little bit, some people got nervous. Maybe the more traditional investors that were dabbling in crypto, they got a little bit nervous about it. But yeah, I know the two markets shouldn't really correlate.
There may be some correlation, but I think as it grows, you'll start to see more of a correlation when the traditional market stocks start to drop. I think you'll see more people flooding into crypto as a safe haven. That's probably happening on some level, but again, it's still so small, such a nascent technology, so it's crept back up. I think it's now back to 500, maybe 600 billion total market cap. But, when you're talking large scale, that's still really small. So the amount of people that actually are actively trading stocks and commodities and things like that, the amount of people that are even aware of crypto, let alone have the ability to sell stocks and then go out and purchase Bitcoin, you're talking very, very, very small fractions of 1%. So
heck yeah. And that's something we should probably talk about in a later episode, is like who is actually in crypto.
Yeah.
Because I know my mom at the house would probably be like, it's some nerd somewhere, or other people are like, well, it's just crazy libertarians, or it's just a bunch of eggheads.
Yeah.
Which isn't true, because I'm a nerd, but I'm not any of those things.
Right. Yeah, I think that'd be good to explore. We should go into that a little bit further and take a look at who's actually
who is in crypto.
I think that'd be fun. But today, why don't we talk about what are some of our topics? Let's talk about exchanges, because we've talked about wallets and security and all that.
Okay.
But for the newer people, we need to kind of get into the nuts and bolts of how do you get your cryptocurrency.
Yeah, that's probably a good idea. I was actually walking a friend of mine through the whole process of getting Bitcoin and putting it on a different exchange so that he could purchase other cryptocurrencies. And I was kind of holding his hand through it, but I could tell that he was completely lost every step of the way.
I remember being that guy.
I think I helped you with that as well. But
you're killing me, Cory.
Yeah. So we could definitely explore that, kind of look at markets and how those operate.
Yeah, if we could help people not go through what I went through. Although the first time you get into an exchange, it's going to feel like that.
Right.
You're lost. It's like a completely different world, and I don't understand what's going on.
Yeah.
And I click the buttons, and things aren't happening because it's not intuitive. And yeah. So let's do that. Let's talk about something happened recently. Some government oversight stuff. What's that subject?
Regulatory hearings. Yeah, the Senate hearing on cryptocurrencies just took place a couple days ago, and it was surprisingly cautiously optimistic or bullish. So yeah, let's talk about that a little bit and explore that, and kind of just maybe a history on regulation and maybe what we see for the future, how it's going to play out.
Definitely. And I think a very timely subject. Let's talk about market corrections.
Yeah, both up and down.
Yeah. So we'll get into all that here in just a few. So stick with us and enjoy this episode of Clearly Crypto.
Yeah.
Okay, segment 1. Let's talk about exchanges.
Exchanges, okay.
So we've talked about wallets, security, what crypto is. Mm-hmm. Now we need to figure out how this is kind of the more for the noob type of a segment.
Right.
Where I was just a few months ago. How do you get into an exchange? How do you navigate the exchange? What is an exchange?
Right.
How do you get your cryptocurrencies on it? All that kind of good stuff. So if you can just kind of launch in and help me out.
It. All right. Well, there's, I think, 3 different tiers of exchanges. So we'll just kind of lay that out first. So first you have your tier 1 exchange, which is your fiat to crypto. So if you've got your dollars or whatever national currency, depending on where you're listening, that you may have, and you want to turn that into cryptocurrency. So you want to get some Bitcoin, Litecoin, something like that. So that's where you have your primary exchanges, your tier 1, where you can send them your dollars and in turn purchase cryptocurrency.
So that's something along the lines of
Coinbase, yeah, Gemini. There's a few others in the U.S.
Those are the easiest ones too. They're on your phone. Boom, just want to do it.
Right, they're the bigger ones, and they have more infrastructure. So they've usually have some apps that are somewhat user friendly and a little bit more intuitive. Yeah. So within the U.S. though, you have these tier 1 exchanges, but they're regulated obviously by the governing bodies, so they have to comply with anti-money laundering, know your customer laws and regulations. So in order to get into a cryptocurrency, if you're going to exchange on one of those, you need to provide some type of identity proof. So they'll accept a driver's license upload or a passport upload, something that they can link your identity to that account.
Yeah, I remember going through all that, taking a picture, holding it up to a webcam or whatever else, which that kind of flies in the face of a lot of the idea of cryptocurrency, doesn't it?
Yeah, absolutely.
So I'm giving them my information just so I can play their game.
Right. And we'll kind of get on that in some of the other tiers, and there's some solutions to kind of work around that, I think, coming in the near future. But it's still very early days, and the government still wants to know who's got what money, what they're doing with their money. And
fair enough. I mean,
and you're not going to get
around that.
There's a lot of
fraud out there, and it would be nice to have a little bit of regulation so you're not going to get taken to the cleaners by some fly-by-night exchange.
Right. And there's a lot of them out there. You still have to be kind of careful. But if you do just a little bit of research, and there's some pretty trustworthy exchanges out there that have already been well established and pretty safe putting your money into it, exchanging it for crypto. Again, just make sure you get your cryptocurrency off that into your own wallet where you control the keys. Because as we've talked about time and time again, and just happened just recently, I think in the last day or two, there was another major hack of another major exchange. It was BitGrail, they lost tens of millions of Rail blocks, which is a new cryptocurrency, a very promising one, but they centralized it. People left it all on the exchanges and lost millions of dollars in this cryptocurrency.
Take your money off the exchange.
Right.
That should be our mantra.
Yeah.
No money on the exchange.
Yeah, that flies in the whole face of cryptocurrency. The whole point is that you can be able to control your own finances. You hold your own money. So when you give it to a third party in exchange to hold for you in a custodial wallet, you might as well just have a bank account at that point. So
that's
tier one.
That's your jumping off point,
right,
where I actually get my mainstream,
usually
more mainstream cryptocurrencies like Bitcoin, Ethereum.
Right.
I know Ethereum's not actually a currency now. But
who knows? We'll see. That's an interesting topic. Yeah. So we'll just go with Coinbase. For instance, you can purchase Bitcoin, Litecoin, Ethereum. You can also purchase Bitcoin Cash, which I wouldn't recommend, but it's on there for you to purchase if you're so inclined. Like so once you have your cryptocurrencies, if you want to get into any other hundreds of other cryptocurrencies, you need to usually find a tier 2 exchange. That's primarily crypto to crypto. So they don't allow USD or any type of other fiat deposits. So there's a couple benefits to that, though. Usually you don't have to provide as much or any, in some cases, type of verification to use that exchange. So for instance, I've heard of people using like KuCoin. You can deposit your Bitcoin or your Litecoin or Ethereum onto that exchange and then exchange that for other cryptocurrencies that you might be interested in, and also withdraw without having to provide any real identity. You just set up a user account, so provide an email address, a password, and then you can start trading back and forth between cryptocurrency.
Yeah, I've used Bittrex before.
Right.
That's kind of the thing we're talking about here, right?
Yeah.
And I don't remember having to provide all my entire history just to swap some Bitcoin for some.
Yeah, they're a little bit in between. You do have to upload a driver's license. They're based out of Seattle and Bittrex, so you still did have to do the identity verification, and they actually do allow USD deposits. So, but that's kind of in between because they also have the Tether, the US dollar Tether, which is a cryptocurrency.
Yeah, I accidentally got some of that once. I didn't like it.
Yeah.
So I think I'd got some. Was trying to get some fun. Oh, it was when the hard fork happened and Bitcoin Cash came out, and so I claimed my Bitcoin Cash, and I'm trying to sell my Bitcoin Cash.
Yeah.
To get some other altcoins.
Yeah.
And I wound up with all of it on Tether, and that was horrible.
Yeah, that's right. Just turned it into another cryptocurrency. So.
That's tier 2.
Right.
And
then you have tier 3 exchanges, which are completely decentralized exchanges. So one of those examples is Ether Delta. So you can go on there. It's decentralized, meaning that there's not a central authority that holds your coins in a custodial account. So that one in particular works on top of Ethereum and smart contracts. So you can deposit a particular cryptocurrency and use basically their trading platform to execute trades. So if you want to trade one cryptocurrency for another, but you still maintain control of your funds essentially the entire time. Now, Ether Delta has had some issues in the past, and there was some hacks that had gone on with that on the platform. There's still a long way to go with those exchanges, but there's a lot of new blockchains that are coming out, I think, that are really going to improve upon that, and I see that actually as becoming the future. I think these tier 2 crypto to crypto that are centralized are going to slowly be swallowed by the decentralized exchanges.
Yeah. Well, just to kind of break in a little bit.
Yeah.
So it sounds like tier 1 and 2, they're closer to your more traditional bank type thing.
Right.
Where tier 3 is more like, hey, it's a post board somewhere where like, hey, I'm looking to buy a swap meet almost, where, hey, I got this to sell, who wants to buy? And it's just me to you.
Yeah.
It's a want ads almost.
Yeah, it's exactly what it is, and that's tier 3 is more in line with the promise of what cryptocurrency offers.
Except
anyway.
for it's a lot more trustworthy because you have the underlying software.
Yeah, exactly.
So, because you can't just cheat me like, I'll give you, if you give me your 5 Ethereum, then I'll give you this thing, and then you run away with my thing.
Right, yeah. You still have to be careful what you're doing, though. One of the most common things you'll see people getting taken advantage of on those exchanges when they're not paying attention. So if a new coin comes out, people will list it for 5, 10, 20 times what the value actually should be, but people that are really anxious to get a hold of that token, they'll pay that, not paying attention to what they're doing. So you really have to be...
Okay, so I don't know if you ever played World of Warcraft. Probably not.
I haven't, but I know enough people that have.
I played a little bit back in the day. So there was a exchange on that. So it was users would go out, mine gold, whatever, and then they'd sell all the special swords and crap they got. But you set the price yourself, and whatever somebody was willing to pay for it was the price.
That's the market. That's exactly what this whole thing is people will pay whatever people feel that it's worth.
Yeah, but you could get, if you were stupid, you would wind up paying 5,000 whatever gold for something that was worth 3-4 gold.
Yeah.
So buyer beware.
Right. You see that all the time, but it's not that clear cut. It is. When I say you have to know what you're doing, so if you're trading, let's just say you have a new coin. We'll go with you have fun tokens, which is a decentralized casino. But anyway, so you have your fun and you're trying to buy Ethereum. Well, not looking at the charts or anything right now, fun is worth 0.00000173 Ethereum, something to that degree. So people will omit a zero or move something. And if you're not paying attention to what you're doing and being aware of it, it's pretty easy how you could click on, yes, I want that sell order, execute, and now you've just spent 5 Ethereum, which, is close to $5,000 on $100 worth of...
Yeah. Okay, yeah, so I could see one of the upgrades or ways to make it more fair would be coming up with better solutions or software to help make trades more fair. Mm-hmm. Yeah,
that could definitely be...
I'm sure there's smarter people out there than me working on that.
Yeah. We'll see how it all pans out. It's really interesting to see how it's all going to come together. But something that you mentioned earlier, it's whatever people will pay. So a lot of people I think they're confused by what gives Bitcoin, what makes it worth $8,000 or $8,800 at the time, and why can't it just go to $100,000, or where can it go to $5? But it's an open and free market. So whatever anybody is willing to pay at that particular time, that's how you do price discovery. That's how it is. So if you look at an exchange, whether it's a centralized or decentralized, you'll see all these different buy and sell orders. So people will say, I want to sell X amount of cryptocurrency at $10 a piece, and then you'll see sell orders below that for $9 and sell orders above that for $11. So whatever the buyers determine they are willing to pay for that cryptocurrency, that's what sets the price.
Okay, all right. So let's break this down. Go to tier 1.
Okay.
Get there, jump through the hoops, so now I can buy me some cryptocurrency.
Right.
Now, that's pretty easy. I mean, I was able to do Coinbase all on my own. Mm-hmm. Couple of little helps here and there, but it's pretty straightforward. So that's your foot in the door to actually buying some cryptocurrency. Now, I want to actually go in and start looking at altcoins and whatnot. And so now I need to go to a tier 2, tier 3. What does that process look like? What do I do?
Okay.
Essentially.
Well, first of all, I never recommend moving tokens straight from exchange to exchange. And most of them expressly kind of forbid that anyway.
Okay.
So once you have your tokens on, we'll just say Coinbase, you've got Bitcoin, pull that off to your wallet.
Which we always would recommend anyway. Get it into your wallet so it's yours.
Right. And hold that, and then if you want to exchange for another cryptocurrency. So you got your Bitcoin in your wallet. You'll have to open up an account with another exchange. Again, it should be fairly straightforward and easy. You just have to provide some, username, email, things like that. A lot of them will ask for a two-factor authentication anyway. I highly recommend you having that on all of your accounts. Even in your email, if you're not using that, you should have 2FA or two-factor authentication. You can use like an Authy app or a Google Authenticator. And essentially what that does is it just makes you pull up a one-time code that's sent to your phone, and then you use that to log in. It's just one more layer of security to try to prevent somebody from getting into your account. So once you've got that all set up, every exchange format is a little bit different, but you're going to want to find the tab that essentially says deposit. And when you click that, depending on what exchange, it's going to list out, 50 to 100 or however many they have different cryptocurrencies.
Yeah.
And it can be kind of confusing.
Where it gets confusing.
Right. So you want to find whatever currency you're trying to deposit. So if you have Bitcoin or Ethereum, you're going to click that, and then that will generate an address for the wallet that particular exchange controls.
Okay, so there's have a wallet set up to where you can put your currency into their area of trading area.
Yeah,
almost.
Essentially.
Okay.
They'll give you a QR code usually, or just an address that you can copy and paste.
But they have to have it in their system before you can do anything with it anyway, so that makes sense.
Yeah, if it's not listed on their exchange, you can't exchange it on there.
Right.
So you got to figure out which exchanges support which token that you're trying to get a hold of.
All right, so that's you do all that, load your money into there, so now you can actually start trading.
And then it'll take a little while, depending on which cryptocurrency you have and their confirmation times and all that. It might take a few seconds up to a few minutes for it to register in your account, saying, okay, now you have an account balance of 0.5 Bitcoin or 10 Ethereum or whatever the case might be. Then most exchanges of these tier 2 exchanges have different trading pairs. And this is where it gets a little bit more confusing. So you have usually a Bitcoin trading pair, an Ethereum trading pair. Some of them have USDT, US dollar tether. That's the other cryptocurrency that's meant to mimic the US dollar and provide some type of stability that you can exit in and out of cryptocurrencies. It usually floats right around $1. So they have several different trading pairs. So depending on what you're trying to get, that's the trading pair that you want to use.
Okay.
Does that make sense?
Vaguely, sorta. So I might not be able to directly use the cryptocurrency that I have to get the cryptocurrency that I'm wanting to trade it for.
So I think one of the most important things, like I had said earlier, the most valuable thing that you can get out of all of this is the knowledge on how it works and how it operates. And the same thing holds true for exchanges. Before you sign up and start sending coins around, it's worth it to take the few minutes to figure out how that particular exchange works and figure out what you're trying to do. So there's a lot of different FAQs, frequently asked questions to different exchanges on how they operate. There's YouTube tutorials. That's what I've done in the past when I sign up for a new exchange, because they are different and they can be kind of complicated. So just take some time, read about them, search Reddit forums on how to use whatever particular exchange, look on YouTube, figure out how to use it, how to trade it, what you're trying to do. It might take you 10, 20, 30 minutes, but it's time well spent.
Or make friends with someone that's already done all that.
Right, they can walk you through it. But just take that little bit of time up front and it'll save you a lot of time and frustration and potentially a lot of money in the long run.
Okay, yeah, so the advice, now we know there's the 3 tiers. Go Google it.
Yeah.
Honestly, that's probably going to be your quickest way to find that YouTube video that's going to directly walk you through step by step. I almost guarantee if you Googled this exchange with I want to take Bitcoin to Ethereum, and there's probably a guy that has a video that shows you exactly how to do it.
Right. And that's what I did when I signed up for KuCoin. I took 10 minutes and I went to YouTube and I said how to use KuCoin. And there was a 17-minute tutorial. And there you go. Then I knew exactly how it operated, what buttons to click, how it all works. So
yeah, because hey, after all, this is just a podcast. We're not financial advisors.
Yeah, absolutely.
And we always tell you need to do your own research. So hey, we've introduced you to there's these things. This is kind of how you do it, but you're not going to get over a podcast and a 15-minute talk about exactly all the little steps and minutia that you're going to have to do. So yeah, best advice on that is use your friend Google.
Yep. Everything's out there on the interwebs.
Hell yeah, use it.
This is the Clearly Crypto Podcast.
So we were talking about exchanges and markets and whatnot and how there's regulations and whatnot going along with that, and you sent me an interesting article about that the other day. You want to tell me a little bit about it, Aaron?
Sure. So yeah, it was just kind of a brief summary of a hearing that has happened recently. The Senate held a hearing on cryptocurrencies on 8 February with several regulatory bodies and the chairmen of those regulatory bodies to kind of wrap their heads around what this new technology is and figure out a way forward. And it was surprisingly optimistic, which was really good news. I think a lot of people had a lot of fear that they were going to crack down and, put the hammer to cryptocurrencies and try to stomp them out. But that's not really what the tone of that hearing was.
So it was more of a legitimizing more than just trying to get rid of.
Yeah, exactly. So the government has struggled for quite a few years with how to treat cryptocurrency, what to do about it, because you have two ends of the spectrum on this. So from one angle, they don't want consumers to get hurt. They have the interest of their consumers, consumer protection. They want to make sure that the space is not filled with fraud. And right now it kind of is. So it is important that they step in and try to help regulate, particularly some of these ICOs, these initial coin offerings.
Yeah.
And that was one of the things that they targeted on within that, is they're really going to take a harder stance on these ICOs to regulate them and ensure that they're basically not just frauds. And we've seen quite a few of those recently. Okay. Granted, it's still a small percentage when you're looking at all the ICOs, but it's really high for the amount of coins that can just pop up out of nowhere and run off with tens to hundreds of millions of dollars.
And that's what happens when we're in the wild, wild west, like we still are.
Yeah, exactly.
And that's what this is part of bringing it more into the mainstream. Mm-hmm. And so what are some of the things they were talking about?
So they were talking about, first, how to regulate it, because one thing that's unique, and I think we've touched on before with cryptocurrencies, blockchain technology, is that they don't fall squarely under one purview of any one government alphabet agency. So prior to this, you had your traditional money, and if you were buying stocks, that fell under the SEC, the Securities Exchange Commission. If you're talking about currencies, fell under a different agency, and so on and so forth. But now with this new technology, it's really difficult to distinguish: is it a currency? Is it property? Is it a security? How do we do this, and how do we work together to come to an understanding that works for that? And there's no clear way forward, and I'm not sure. I don't think anybody knows at this point how that's going to play out in the long term, how they're going to be regulated or controlled.
Yeah, well, there's going to be, in reality, there's going to be years of forming new committees, forming new regulatory bodies, and it's going to have to go through all kinds of legislation. I mean, look at how long it took for the internet to get where we are now.
Right.
A lot of regulation honestly had to happen before it was mainstream and stable and accessible to everybody.
Right. And that's exactly right. And that's what they're doing right now. I think the IRS just said that they put together a specialized team to try to go after people that are trying to basically do tax evasion through cryptocurrency.
Yeah. I mean, nobody likes the government all up in their business or anything, but you have to have a certain level of regulation just to keep the bad guys from taking advantage of the good, honest people that are just trying to... I mean... The government, in a way, is us, and if we're being smart and we're voting consciously with doing some background checking, just like we were supposed to be doing with our cryptocurrencies, hopefully we can help elect the right people, and when they fail us that way, vote them a different person, better person next time.
Yeah. In theory, that's all how that works,
I know,
right? Until the banks become too big and they take over all of the money laundering for the drug lords. And as long as the fine is not more than the amount of money that they're actually bringing in through the money laundering, then everything's good. So
it's kind of a touchy thing, though. I think we're kind of getting off on a tangent, but I do want to touch it a little bit. Is we are very hopeful right now, and the technology has so much potential, and we want to be protected. But where's that sweet spot where we're protected but not controlled?
Right, and that's the other end of the spectrum that I got distracted from. So you have the one end, they want to do consumer protection and all that is good. But then on the other hand, you don't want to strangle it in the cradle. So I think a lot of the regulatory agencies and regulators and the chairmen of those committees are starting to realize that this is a new and transformative technology. And if you overregulate that, you're going to stifle the innovation and the ability to let this technology really come to reach its full potential. And if we make it a more inviting place, make the regulations such that they're not strangling its cradle, we're going to open that up not to just Americans, but people that want to come to America to build new services, products, and build up this financial infrastructure. As we said, the future is clearly crypto. Even the regulators, they know this now. They're taxing it. They're looking at it as legitimate securities. So it's a real thing. It's here. It's not going away. And whatever nation, I guess, has the best environment to allow that to flourish is ultimately going to see the most job creation, the best economic results from that. So
it's good news that they're talking about it.
Absolutely.
Talking about it in bullish terms where they're trying to promote and find out how to make it thrive and still protect people and protect the government's interest in it, because does cryptocurrency not have the ability to basically marginalize or make a national fiat currency just doesn't matter anymore?
Irrelevant.
Yeah, irrelevant. That's the word I was looking for.
Yeah, I think it does. And I think we'll see that maybe not as immediately in some of the bigger, more well-established first world countries, but definitely in some of the smaller countries where their currency maybe is not as stable. I think that if they adopted a well-established cryptocurrency kind of as their reserve, I think they could benefit immensely from that.
Yeah, but it scares the shit out of people, though.
A lot of them it does, yeah.
OPEC is based on dollars.
Right.
So if dollars are irrelevant now,
right,
what happens to that controlling interest that the U.S. government has, and how do they maintain that power? Do they lose it?
Right.
God, there's such a complex web of things that are going to have to happen.
Yeah, you talk about currency wars, capital flight, currency controls, and things of that nature, and it does scare them. So recently, talking about regulation, China has banned Bitcoin and banned cryptocurrency several times, multiple, 5-6 times, I don't know, just in the past couple of years. And so the latest FUD to come out of China is that they have banned all foreign exchange activity. So if you live in China and you try to get on the internet and access Bittrex or Coinbase or one of the other exchanges is not controlled or located in China, you get shut down. You're behind that firewall. So that's their latest attempt to try to prevent capital flight.
How successful has that been, though?
We'll see. This just happened. I don't know if it was yesterday or the day before that they announced it. So, but my intuition is not successful. No. It never has. Every time they've come out and said, okay, we banned Bitcoin, people will find a way to protect their capital. They'll just come up with more creative ways. Shell companies, corporations, they'll have an associate of theirs that's located out of the country that can purchase, and then, they'll find a way around it.
Unfortunately, that means it's going to have to grow in the dark, and we want this whole thing to grow in the light.
And it wouldn't surprise me if they change their stance in a month or two, like they have multiple times in the past. But just shows you that these governments and regulatory agencies are scrambling to try to figure out what to do, how to regulate it, control it.
But with anything is once you reach that critical mass where, if we got 20% of the population was actively using, trading, owned cryptocurrencies, I mean, it's already a foregone conclusion, and we're nowhere near that.
No, not even close.
But edge it up to about 20% of the population, it's a done deal. It's happening. You just better figure it out, because that's the thing. Everybody's about to be doing it.
Right.
Real quick. Yeah,
and I could see a future where national currencies are not necessarily replaced, but they are now backed by a different reserve, a cryptocurrency potentially. So, you talk about having OPEC and the petro-backed dollar, but I could see a future not too far off where there's a global reserve and it's cryptocurrency. It could be Bitcoin or one of the other ones. So you still have dollars, and they could even potentially turn that into a cryptocurrency. There's other countries that are experimenting with that right now. So you could have a US dollar cryptocurrency that is controlled, issued by the state, but ultimately backed by a global reserve as Bitcoin.
That might be wrong, but that just made a light bulb go off, because already our budget money is already digital. Very little of it is paper tinder you have in your wallet. How big of a change would that be just to move from the banking system we have now just to blockchain, the US dollar, and now that's our national currency backed by Bitcoin or our whatever we have, our resources, however you would monetize that.
Right. I don't think it's a big jump, and it really depends on where you're at. Maybe for the United States, Japan, China, maybe a bigger jump, but smaller countries, Venezuela, for example, they've people that live in Venezuela, they've experienced a complete restructuring of their currency system multiple times within one generation.
Yeah.
They've lost everything that they've had due to hyperinflation, created a new currency that's not called the peso or the dollar, something new. Used that for 20 years, and then they hyperinflated that to the point where it collapsed completely, switched to a new type of currency. So when you see that, and that's happened 3 times within your lifetime, it's a pretty easy jump to go to a new type of currency that's backed by Bitcoin or something of that
try
nature.
Something different.
Yeah.
So that's weird. So I mean, I guess at the end of the day, in say 20 years, when every cryptocurrency, that's just the way the world works. For most people, they're not even going to notice that anything really happened.
Right. That's the way most technologies go. And you look at age ranges and people, our kids right now growing up. I don't think that they'll know any difference, and they won't think it's weird. My kids already don't. I give them Bitcoin allowance, and they think that that's normal, right? Doesn't everybody have cryptocurrency? Well, so as they grow up and this technology matures, it'll just be normal. And when they're our age talking about it, they'll go, yeah, people used to have this weird paper money, and it was a national currency. It was, it was really weird because we're so global now, but they still had these national currencies, and it was the flag money of the country. And
it'll be like explaining rotary dial phones and phonograph players. But I know that was a big tangent I just went off on, but all that's going to happen through governments accepting it, and through governments accepting it, that means there's going to have to be laws, regulations, all that kind of stuff is going to have to pass, and that we're seeing right now positive signs in that direction.
Right. Yeah. Before, you could notice a very different tone just in the past several years from how it's been looked at and treated just within the United States to the most recent hearing that was just took place a few days ago that had more of an open, welcoming, bullish. They came right out and said, I think it was the chairman of the CFTC, Commodities Future Trading Commission, Christopher Giancarlo. He said his kids aren't into stocks. He's got a 30-year-old daughter, but she's got Bitcoin and she loves Bitcoin. And that's his daughter. So he can kind of see that this is where this is heading.
It's happening.
We got to figure out how to make it happen, do it in a safe way, but also that doesn't stifle the innovation. And it's going to take some time. Yeah.
Everything's going to take some time. Government's going to take a long time to. Crypto's going to be light years ahead of where government's at, but we'll get there.
Yes,
it's encouraging. So this is for me, very interesting because it's all about speculation. But let's hear from you guys, because you can reach us on Twitter, Telegram, Facebook. Mm-hmm. You can email us at clearlycryptopod, all one word, at gmail.com. Tell us what you think, and because this is a big conversation.
Right. Yeah, I'd love to get some feedback and kind of see your perspectives on it. What you guys see for the future, where we're at, how the U.S. is going to get their arms around this thing, or any country that you might be from.
Yeah. This is huge, and can't wait to see how it goes and see what my son's future is going to be like.
Yeah,
it's going to be amazing. Aaron, I love talking about this. Hopefully you guys like it too, because we've spent a little bit of time on it. But yeah, give us your feedback. Remember, Facebook, Twitter, Telegram, Gmail. We haven't gotten into all the LinkedIns and all that kind of good stuff yet.
Yeah, more to come on that maybe.
We got full-time jobs and kids and babies and stuff, so
right.
I don't have time to check everything. 3 social media sites is enough for me at the moment.
There you go.
But send us your feedback. Let us know what you think, because this is a big, fantastic, amazing, holy crap, hard to wrap your brain around subject, and it's fun to speculate. I love speculating.
Yeah. Just to put one more thing in there, one of the things that I like about crypto, and I think what got me kind of hooked, is also it makes you question the established norms and why we do things the way we do things, and what it really means. Because prior to crypto, it was sovereignty that created currency.
Yeah.
And now we're looking at a paradigm shift where it could be currency that creates sovereignty. Because if you look at one of the main controlling powers that any particular government, sovereign nation has, is its ability to print, control, force the citizens to use whatever particular currency, tax that currency. So now we're looking at a different system that may not require that. Or
that's where the whole democratization of currency comes in, isn't it?
Yeah, exactly. Interesting stuff.
Super. Man, all right, so we're going to move on, but keep listening because we got more good stuff coming up. So unless you've been living under a rock for the last few months, you're very well aware of what's been going on with Bitcoin and pretty much all the cryptocurrencies. We had that huge spike back in December, $20,000 Bitcoin.
Yeah.
Crap, insane.
Irrational exuberance.
And then everybody jumped off a cliff whenever it dropped down to just a few days ago, just over $5,000.
Right.
Now we're back up, floating between 8 and 9.
Mm-hmm.
So that's called
a market correction, or just market forces. That's a market. It's still a young market, so you're going to see ups and downs. But in the cryptocurrency markets, they tend to be a lot more pronounced. They go way up and they go way down. So what causes that, though, and what can we expect from here, right?
Yeah, because, I mean, I don't know about you, Aaron, but I see that, well, my cause from layman's perspective, it seems like there was a lot of hype happened. Some media got out about Bitcoin.
Uh-huh.
People got excited. They started buying, and it just got out of control.
Yeah.
So we needed a market correction. Which
right.
What the hell is a market correction?
Market correction is what we just saw. It's when the price of whatever particular asset gets way overinflated. You can call it a bubble. I think it wasn't a bubble.
No.
And then and then it corrects back down to a more accurate price target. So why 8,000 though, or why 5,000? Well, one way to model, I guess, what a fair price for, we'll just say Bitcoin, what is that worth? I think what a lot of people use, or one different modeling mechanism, is to look at the cost to produce a Bitcoin. So what does that cost? So if you start looking at what it costs to purchase the hardware, run a mining setup, the cost of electricity and all of that to generate one Bitcoin, that gives you about an idea of the minting cost of a Bitcoin. And from there, you can use that as kind of a watermark and go off of there.
Okay.
And then you know, obviously you have speculation and all of that play a big factor into it. But if you get where an approximation of what it costs to mint a Bitcoin, then you can kind of, it's a good starting place at least.
Okay, so that's one school of thought about it. It's actually how much it costs to produce one Bitcoin.
Right, so mining Bitcoin it's a big business. There's people that put a lot of money. They have a lot of resources.
Thus the farms.
Right. And they don't necessarily want to sell at a loss. And let's face it, these are the people that are making it. They have quite a bit of Bitcoin. Now, they're operating a business just like anybody else. So they do have to sell that off at regular intervals to maintain their business and keep it
Makes
going.
sense.
So if you know what the approximate value of what approximate cost of what it takes to mint a Bitcoin, then you can kind of get a rough estimate.
You want to
there.
get a good profit margin out of that. So if I'm spending, we'll throw numbers out that have nothing to do with reality. Say it cost me $3,000 to mine one Bitcoin. I don't want to sell it for $2,500 because now I'm operating at a loss. I can't even pay for my power.
Exactly.
Okay, that makes sense. So there's that's almost a fallback. That's what a Bitcoin is worth.
Kinda. It gives you a good basis, but then you have an asset that's limited in supply. People want to get it other than just the miners, and a lot of it's just speculation. People thinking that this is going to rise in value, and so that's where you get these wild price swings. Yeah. So what happened? There was a lot of media buzz. There was some good news that came out. You started seeing it everywhere in the news. People talking about it, and people just bought it up. It kind of created a little bit of a mania.
Yeah.
And people that didn't necessarily understand what it was or didn't even know how to pull it off an exchange were just trying to get some because it's only going to go up.
Bitcoins are good. I got to be a Bitcoin.
Right. And then you get a little bit of FUD, fear, uncertainty, and doubt entering the market. Some bad news. China saying they're going to ban Bitcoin.
Yeah.
Exchanges getting hacked, and people that don't understand the fundamental value of it, they get scared and they want to dump, and that just kind of creates a waterfall, essentially. People selling off. It's called shaking out the weak hands. So people that don't really know what they're doing, they see it falling and they're like, crap, I got to get out. This is crashing. It's going to be worth nothing. They were right. It's all a mirage and a lie, and I don't know how I ever bought this. And
well, you shouldn't be looking to get rich overnight.
No, exactly. We're gonna continue to see this. I wouldn't be surprised to see it spike to 50,000 this year, just to come back down below 20,000 and maybe level out at 16 or 18, or we could ride this sideways from 8 to 10 for the next year or two. That's purely speculation, but.
Well, I know, isn't there usually like a January correction anyway? Or historically there has been, not as big as what we just saw, but taxes come, people have to pay taxes. It's like, oh crap, I gotta sell some of this stuff or whatever it is. For whatever reasons, there's multiple, but January tends to show a sell-off and and a bit of a drop in the value of a Bitcoin.
Yeah, no, you're right. And if you look at percentage wise, actually, it's not that far off. So dollar wise, when you see a $20,000 Bitcoin drop to around 6,000, and that's a lot. But looking at percent wise, it's not that far off from what we've typically seen.
A Bitcoin was what? $2,000 ish
in January of 17.
Yeah,
I'd have to look at the charts. I think it was still right around 1,000, and then it started climbing February, March.
Okay.
Yeah, it might even have been below that.
Wow.
At the beginning of January, $800 or $900 or something. But
so all you whiners, just look. We're even if it settles around 5,500, that's still a massive increase from just a year ago.
Yeah.
So a Bitcoin's still worth something.
Yeah. Exactly. If you want to get some, buy it, hold on to it. I don't suggest day trading. A lot of people think they can time the market and buy low and sell high, but that's really a difficult strategy to kind of master. Not many people are successful with that.
Man, some people I'm sure would get lucky, but I'm not that good a gambler.
Yeah, that's what it is essentially. Investing of any kind, you're just gambling. Hopefully you have some knowledge to go behind your bet, but you're just betting.
Yeah.
That's what it is.
One contributing factor to this market correction that we're seeing, I'm wondering, because I know almost all the major banks now have made it where you cannot purchase cryptocurrencies with your credit card.
Yeah.
I for one think that's a freaking awesome good idea to not let people do that.
Yes and no.
Maybe I'm old school. I was old school where I'm going to drop $20,000 on this brand new credit card to buy a Bitcoin, and I'll pay 17% interest on that when I have no guarantees that the thing I just bought is going to increase.
Right, but then I guess that's a whole different topic. Is should we allow people to do what they want with their money? Is it good and is it healthy? I think it's healthy for a market to let it regulate and correct itself. If people are that dumb and they get burnt, then they're going to be smarter investors, smarter traders the next time around.
Of course, you're talking credit. It's not necessarily their money because it's on the credit card.
Right.
Now it's the bank's liability. Well, I mean, the bank's going to make money off of them. I know that.
Right. So they don't have any issue with you go out and buying a boat with it, though.
No.
They'll encourage you to spend it on anything frivolous that you could possibly want. But they don't want you buying cryptocurrency, which is kind of interesting to me because they're saying, well, they don't want people to be subject to the loss. But
I wouldn't put a boat on a credit card either.
No, but people do. People will run it up on anything that will guarantee that they're never going to see another dollar out of it. They'll buy, they'll spend it at the bar and on clothing and whatever else. But if they buy cryptocurrency with it, at least they're holding another asset that could potentially be worth.
Okay, I didn't even think of it that way.
Yeah,
I'm like I said, I'm super old school. I don't use a credit card for anything.
Yeah,
like almost nothing. If I know that I can't pay it back very shortly, I don't want to pay that interest, so I'm not putting it on a credit card.
Right,
that's me.
That's smart, but if we're looking at it from the banks are trying to come off as the good guys and saying, well, we don't want to put people in danger of losing they don't give a shit. They really do not care. Yeah. As long as you have that credit limit, that credit score, and they can continue to collect payments and interest, that's not what their angle is.
Bottom line, you could be buying rocks and they don't care.
Right. I think they're more concerned with allowing people easy access to cryptocurrencies because cryptocurrencies threaten their entire business model. All the banks really do they act as a middleman to get in the way of transactions and take a huge chunk of it in between. If you start looking at, banks are here to protect us and, they're looking out for us. They don't want us to spend money on cryptocurrency that could potentially lose value. No, they don't care.
Well, I guess so. A bank's a business.
Yeah.
In the business of making money. Mm-hmm. And if what they're providing for you helps you get away from them and go to somewhere else where they're going to lose money from you, I guess that's a net bad for them.
Right. I think that's what it is more than anything. Okay. Because not only so that was recently in the headlines, is just about all the major banks now have said, no, you can't use our credit cards. Mm-hmm. It started out with just a couple, and now basically every major bank, at least in the U.S., you can't buy cryptocurrencies with our credit card. That may have a little bit to do with some regulations as well, because now you're buying a currency. But I think more or less it's just having to do with you're opting out of their system. You're using the money and the credit to buy a competing currency that's opting out of their current model, which is their whole profit margin and their business model.
Okay.
Because not just credit cards, but if you look at how banks historically have approach cryptocurrencies, a lot of banks they won't let you open up accounts with exchanges, or if they know that you're purchasing Bitcoin, even if it's just with a checking account doing like an ACH transfer, they'll cut you off. And people have had their bank accounts shut off just for doing that. They'll send them letters saying, hey, we've noticed you're purchasing cryptocurrency and we've had no choice but to cancel your account with us.
Wow.
So it makes sense though.
Okay.
I mean,
so yeah, I never looked at it that way. That's out of my experience, I guess. Shows how limited I am, how much of a financial genius I am. But so how does that apply to, because we've been talking about the market correction, is that just one of the things that possibly contributed to it? Now banks have kind of taken a different stance on it.
As far as the credit cards and purchasing, no,
it's a small little tiny piece.
Yeah, it's a small. Most people don't purchase with credit cards.
I would hope not.
Anyway, but
sorry, I'm sticking with that. I think it's a terrible idea.
It is. It's not a good idea. Don't do that. Don't borrow money to gamble with, because that's essentially buying any asset. I wouldn't, buy stock with my credit card.
Yeah.
That's just
Can
a bad
you buy stock
idea.
with a credit card?
I don't think so.
Okay. Well, as long as we're fair that way, then
Yeah.
I guess, sure, why not? It's plausible.
Right.
But so that's market corrections, though, because ultimately, if you get away from that, what's a Bitcoin or what is this altcoin or whatever, what is it worth to mine? What does that cost you? You also have that human element of what are people willing to pay?
Yeah. That's really all it comes down to, is what are people willing to pay at the time. A lot of it's speculation, especially in the altcoin markets. You see coins that are essentially vaporware, which means they don't have any type of working product. It's just, hey, we have this idea, we're gonna make this.
Yeah.
And these tokens have billions of dollars in market cap, and Dentacoin is a cryptocurrency made to pay dentists. And
Wow.
You look at something like that jumped up to $1 billion market cap, and you're like, no, this is rampant with speculation, and it's got to come back down. There's got to be a correction.
Correct me if I'm wrong, but I would think that what a coin is worth shouldn't just necessarily be what are people willing to pay for it, but what are people actually able to pay for it. What are you capable? Because I mean, if a coin gets inflated so much that you have to cash in your savings account, your retirement account just to pay for it, then it's overvalued.
That's just, well,
I mean,
we're talking semantics.
Okay.
What are you willing to pay for it? What can you pay for it? I mean, it's the same thing.
Okay.
If you have to cash out your retirement and sell your house, then that's what you're willing to do. That's what you're willing to pay for it, and that's what it's worth, I guess. So
yeah, but wow, okay. But that to me would mean at that point now it's really overvalued, and only people with tons and tons of money are going to be able to buy it. So Joe Blow me, it's kind of left in the dark. Even though I know you can buy fraction, tiny bits of Bitcoin and most other coins. So maybe what I just said is a complete moot point.
I think so.
Damn it.
It's that's all any market is. I mean,
That sounded smart for a minute.
You could talk about intrinsic values, but when it comes down to it, the price is determined by what people in a free market are willing to pay. And if they're willing to pay $1 million per coin, and that's what the general consensus is. I mean, let's break that down for just one second real quick. So you see a lot of coins that have low volume, low liquidity, which means there's not a lot of people trading them. Their price can fluctuate a lot, and you'll see that in a lot of the altcoins, smaller market caps. I might be selling the only handful of whatever particular coin on one small exchange, so you can see the prices rise and drop quite a bit.
Yeah.
Because there's not a lot of volume and liquidity. There's not a lot of people trading it at that agreed upon price.
Okay.
So you might pay $0.25 for one token one day, and the next day it's worth 75 cents because I'm the only one selling it, and there's only 3 or 4 people buying it. Now you're looking at a larger coin with a huge market cap, a lot of liquidity, and that kind of helps to prevent people from overpaying or underpaying too much. So there's a kind of a general established consensus, of what it's worth. So
okay, that makes sense.
So what I'm getting back to is if you have to sell everything you own to buy one coin at $1 million, if there's millions of people around the world that agree that's what it's worth, and that's what it's worth, and that's what you got to do if you want to get some.
Man, now my brain hurts.
Yeah.
I thought I was doing so good.
Supply and demand. If there's not very much and everybody wants it, it doesn't matter what you can pay. It's what the general market is willing to pay.
Oh, wow. So, but to wrap this up, because we've been going on for a while.
Yeah.
I guess, end analysis, my opinion, the correction that we're going through right now is a good thing.
Yeah.
A net good.
Absolutely, it is. It's not healthy for any market to go straight up or straight down in either direction. You need to have a little bit of stability, and we're seeing that. And a lot of the weak hands are being shaken out, which ultimately is a good thing as well. So,
okay.
But we're going to continue to see volatility.
Oh, yeah.
When that was one of the first things I said when the futures trading came out. I don't know which way it's going, but it's going to go both ways. We're going to see a ton of volatility, you know. And I think that's going to continue until we can get to a price where there's a lot more volume, a lot more liquidity in the market, and things kind of stabilize.
All cryptocurrency, it's going to be volatile for a while until it becomes so ubiquitous that it's a thing.
It's tiny. It's really, really tiny. 600 billion sounds like a lot, but it's not. Not in a global, decentralized, global currency. And that's, we're talking about all of crypto having that large of a market cap. That's tiny. Right. There's U.S. companies that are worth more than that. I think Apple's, 700 billion or something to the tune of that.
Jeez. So until it gets bigger, we're a small dinghy in a big ocean, and until we get to be a big ocean liner, we're going to be not as stable.
Yeah, exactly.
Okay. I love metaphors.
That's a good one. Heard it used before. It's true.
All right. Well, hey, thanks for joining us for this episode of Clearly Crypto. Stick around. We got some exciting things to talk about with you in just a second. All right, Aaron, I think that was a really good episode we just did.
I think it went well. Appreciate that.
You guys can be the judges of that. Remember, join us on Facebook, Twitter, Telegram. You can email us at clearlycryptopod@gmail.com. So come back to us next episode. We're going to try something a little bit different. We're going to do our first, what we're going to call a deep dive. We're going to take.
I'm excited about that.
Yeah, about 45 minutes to sit down and just really tear apart one thing. And I know there's enough inside Aaron's gigantic brain.
No.
In my inane questions, we're gonna get way to the top of it, and then I'm gonna tear it down and make him tell it to me like I'm a toddler.
Whew, that's a tall order, Cory, but we'll see what we can do.
So here's your subject. Why you want to tune in next time? We're gonna be talking security through obscurity. What the hell does that even mean?
Yeah, well. Oh, that's a great question. Let's yep. Next episode.
All right.
Deep dive. I'm looking forward to it.
Well, thank you guys again for joining us. Remember, we are not financial advisors. Do your own research before you make any big purchases.
Absolutely. Making any purchases, trade, sell, buy, hold decisions of any type. Don't listen to us. This is just our opinion. I may not know what the hell I'm talking about.
I know I don't know what the hell I'm talking about. But thanks for joining us, and we'll see you next time.
See you guys next time.
Thanks for listening to Clearly Crypto. The proceeding was an Acorn production. All opinions expressed are those of the hosts alone. This podcast is for entertainment purposes only. We'd love to hear from you. If you enjoy the show, you can like us on Facebook, follow us on Twitter and Telegram, or email us at clearlycryptopod@gmail.com. Thanks for listening, and see you next time.